Welcome to another S&P 500 analysis. Today is July 1st, 2022. The S&P 500 continued to be in a lower low, lower high downward price pattern. And we are continuing to see a weekly range of 200 points or more on the S&P 500. But on a weekly performance basis, the S&P 500 only changed by a couple percentage. So is the S&P 500 setting up for a waterfall type of move? In this video, we'll look at the market sentiment, the internals, and the price action of the S&P 500, along with the other major market indexes, and see what they are telling us. Stay tuned. And before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. And if you are looking for an objective, unbiased view of the market, then click on the subscribe to this channel. And be sure to click the notification icon to turn on notification so you won't miss any of my future videos. And just a reminder, be sure to watch my S&P 500 Trade Watch video where I will give you some trade level to watch on the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF, IWM. In addition, I will also present you with some level to watch for the coming week on Apple and Tesla, and a discussion of the E-mini S&P 500 futures, market profile, and volume profile chart. So be sure to turn on the notifications so you will be notified when I have posted this S&P 500 Trade Watch video. Now looking at this weekly chart of the S&P 500, as you can see, the range for last week is just a little bit over 207 points, and it lost 2.21% for the week, or slightly a little bit more than 86 points. It is in a one-time framing up for 2 consecutive weeks, and it is close below this declining 10-week moving average and a 40-week moving average, and it is also still in this lower low, lower high type of a pattern, and inside of this declining price channel. So on a weekly basis, the trend is still down. Now, before we go take a look at the price action in a little bit more detail, let's go take a look at the market sentiment and also the market internals. Look at this sentiment chart here. We see that the VIX, the fear index, is still inside of this 20-30 zone. So the market participants are still quite fearful. And also the put-call ratio is inside of this 0.75 and 1. So we know that there are a lot of hedging, and also as market participants are also getting a little bit bearish as well. For the week, the up-down volume ratio in the New York Stock Exchange really kind of subdued, because even on an up day or down day, it really doesn't show too much of a panic selling or FOMO buying. You could see that the up-down volume ratio is negative, in the middle of the week, somewhere around -3 to 1 in favor of the downside. And on Friday, it was positive 3 to 1 in favor of the upside. And also the daily advance decline, it doesn't show much of a broad market participation on the downside or on the upside as well. Although Friday is show a little bit more broader market participation. We see a little bit over 1,600 more advancing issue than declining issue. But look at these 3 days, in the middle of the week that it was actually down. And the most was 1,220 more negative, more declining issue than advancing issue. So it wasn't a big deal like, 2,500 more declining issue or 2,500 more advancing issue, on the update or anything like that. So relatively, the market is still trying to feeling its way to see what it wants to do. And same go with the 52-week high and 52-week low. Not too much of a, panic or not too much of a stock that is actually making new low, or a lot of stock making new high. You can see that the most was on Thursday, that we saw 344 stock in the New York Stock Exchange make a new 52-week low. So other than that, it was really pretty much subdued. And also the cumulative advanced decline line was also relatively, kind of quiet. As you can see, didn't do much of anything. So it's kind of been, pretty flat. And the same thing in the NASDAQ market is relatively, subdued in terms of up-down volume ratio on the downside of the upside. saw a little bit more on the downside participation on Tuesday that we saw 2100 more declining issue than advancing issue. But other than that, wasn't that big of a deal on one side or the other. Like on Friday, you notice that it's only 1058 more advancing issue than declining issue. And the up-down volume ratio was only a 2.3 in favor of the up volume. And similarly for the new 52-week high, 52-week low, in the NASDAQ market, not much happening. The highest number of stock made the 52-week low was on Thursday with 533 stock made new 52-week low. And likewise for the NASDAQ cumulative AD line, it's also relatively flat, similarly to the New York Stock Exchange AD line. So as you can see, the market participants are still very cautious and also a bit fearful. And they are also, leaning toward the bearish side, as you can see from the put-call ratio. But the market internal are not showing a lean to one side or the other because we are not seeing a broad market participation on the downside or on the upside. It seems like the market, it is setting up for something, right? It's sort of like waiting and just like a calm before the storm. And maybe it's setting up for a waterfall. Now let's take a look at the price action of the S&P 500 on this weekly chart here. You can see it's trying to come up and get up to this area here near the 4,000 level. So if it trying to bounce next week, that would be the upside potential resistance that I'd be looking at for the S&P 500 somewhere near this 4,000 area. But for a continued downside move, I expect this low to get taken out and then move down to this 50% retracement somewhere around 3505. That's the area that I'm looking for on the downside. Now, eventually, this is the reset level that we're looking at. This is the pre-pandemic pivot high here, and that is somewhere around 3,393.52, 3,393.52. So that is the pivot high level that eventually we most likely will see the S&P 500 come down and test this level, and I wouldn't be surprised to see it dip below it and work itself down to possibly this 3195 level at 618 retracement, because we're seeing a lot of stock is already came down and test this pivot high, and many of them is already went below it, and some of them even went below the the pandemic crash low. Okay, so I wouldn't be surprised to see the S&P 500 eventually come down to these level here, at least take out this pivot high here. So that's when the mega cap such as Apple, Microsoft, those stocks that are starting to break down, then we will see this level get tested, and we'll see how the S&P 500 be able to hold this level. And for the NASDAQ 100, we see the NASDAQ 100 came up to this 12,100 level, right? And what we're going to be watching for next week is the downside move and continue to move downward to take out this low and come down to the 618 at 10,589. And that's the level that I will be watching. So basically coming down to close to this 10,500 level on the NASDAQ 100. And once again, this pivot high, the pre-pandemic pivot high at 97.36 will likely get tested when those mega cap tech stock break down. And here looking at the Russell 2000, you see the Russell 2000. See, is it a coincidence or what? Here's the low of this gap here, this candle low. It's 1,792.60. Here's the Friday's high, 1,792.60. So it closed the gap right on the dot. Right? Is it a coincidence or what? In any case. So right now, we're basically looking for the possibility of the Russell 2000 continue to come down, take out this low, and eventually work itself down to this 618, somewhere around 1536 level here. Okay, so that's basically what we're watching the Russell 2000 to continue to make its move back down for this 1536 area. And for the Dow Jones Transportation, you see the Dow Jones Transportation try to come up for this 14,000. It did come up to this 382 retracement at 13,752 area. So right now we still continue to monitor the Dow Jones Transportation come down, take out this low, and test the 50% retracement, 12,363. Again, the pre-pandemic pivot high is at 11,359.49. And here's the Dow Jones Industrial. The Dow Jones Industrial also was trying to make itself come back up to this 32,000 level here. And right now, we're basically still watching the Dow Jones Industrial to come down and check this 382 once again at 29,794. Pick out this low here and work itself down and check this pivot high here, the pre-pandemic pivot high at 29,568.57. And here looking at the New York Stock Exchange Composite Index, you see it is crawling inside of this candle here. See these, these two inside bar candle. So we're basically looking for this thing to break below this low here, okay, and come down to this 382, and also take out this pivot high here, the pre-pandemic pivot high at 14,183.26. And I'm going to be watching for this thing to continue to work itself down for the 13,053 level. Now that I just run through some of the sector perform relatively strong or better, relative to the S&P 500, and sector that are performing poorly relative to the S&P 500. So starting off with the strong sector, here we are looking at gold. You can see gold is showing a little bit of an outperformance on the relative to the S&P, because it is trending up on this relative strength chart here. Now this relative strength is nothing more than a ratio between the underlying and the reference, which is the XPX, the S&P 500 index, cash index. And the next one that show relative strength is the healthcare sector. Right? You see that it is trending nicely upward here on a relative strength. So when it's trending up, moving up, that means it is outperforming the S&P 500. And when it's turning down, then it is underperformed. And the other one is the consumer stable. Here's consumer stable. You can see that it pulled back a little bit, but again, right now seems to be pushing back up again to see. We're going to see what it be able to, push above this peak here. And then the next one is the XLU, which is the utility. As you can see, utility pulled back a little bit recently, but right now it's pushing ahead again and showing outperformance compared to the S&P 500. Then you're looking at the oil, the USO, the ETF for the oil, the USO. You can see that although it pulled back recently, but it's still in an upward trend. So until we see maybe a break below this level here, then I think the underlying oil is still outperforming relative to the S&P 500. And here the TLT, it is kind of hovering, basing, so it could go either way. Basically, if it break below, then we could see that the bond probably will be performing worse than the S&P 500. As you can see here, it's kind of basing here, and then it broke, and then also base over here for a little bit, and then it broke down. So it could happen the same here, that maybe after it base here and it break down. So if we expect interest rate to continue to move up, then we should have some expectation that the TLT will underperform the S&P 500. Now let's take a look at some of those sectors that are performing poorly relative to the S&P 500. The first one here I'm looking at is silver. Now you can see silver is really hasn't been doing too much, and it seems like it is try to work its way lower here on this relative strength chart here. And also you can see the gold miner. The gold miner is also performing poorly relative to the S&P 500. Likewise, the junior gold miner as well. And here's the technology sector. Although it's kind of holding right now, but again, you can see that it's been trending down. So the technology sector really have been underperformed relative to the S&P 500 recently. The financial is also underperformed. Now we've got to watch this here. If it breaks below this level, then we'll probably will see much more sell-off in the financial sector. And here is the communication sector, and you can see that it is also underperformed relative to the S&P 500. And here's the material. You can see material really pretty weak recently here. And you can see this, it's just coming down almost straight down, just like here, relative to the S&P 500. And here we see the semiconductor sector is also weak compared to the S&P 500, relative to the S&P 500. Now, with the recent oil prices going up and also the gasoline prices, one would think that the oil service will be strong, right? But actually turned out it is not. Been relatively weak compared to the S&P 500, relative to the S&P 500. Same with the oil and gas exploration sector. Notice that how weak it is relatively to the S&P 500. Transportation is also relatively weak compared to the S&P 500. And the retail sector also quite weak. As you can see, it's been declining on this relative strength and just recently taking a little bit of a dive downward once again. A lot of people have been talking about the price of fertilizer going up and everything, but as you can see on this agriculture ETF, MOO, you notice that it's also getting weak here. Underperform relative to the S&P 500. And also the natural gas is also underperformed relative to the S&P 500. So that's the look of some of the sector relative to the S&P 500. Now I just want to show you this chart from the Atlanta Fed website. And here it shows that the expected Fed fund rate by the end of the year, by the end of 2022, is expected to be somewhere around 351 basis point. In other words, 3.5%. And the range is 2.9% to 4%. So that is what is expected. And here's the 10-year yield chart. As you can see that the 10-year yield pulled back, and right now it's sitting at 2.88 or 2.9%. Now there's 4 more FOMC meetings before the end of the year. And the next one is this month, July. Then we have one in September, November, and December. So right now, the Fed fund rate is sitting at 1.75, 1.75%. And if we have 4 meetings, and we're expecting 3.5% by the end of the year, that means we could expect possibly 3 rate hike of 50 basis point and 1 25 basis point. And that will bring us to 3.5% by year end. So we'll see. That's what the market pricing in, and then that's how we're going to play out. With the Fed fund rate by the end of 2022. And here we are looking at the U.S. dollar. You see the U.S. dollar is coming back, bouncing back up on this weekly chart here. Remember, I'm still looking at this level somewhere up at the 107. And I'm still watching this dollar to continue to come up, take out this high here, and move toward it 107. And crude oil, although it bounced around for the last couple of weeks, but it is still holding above the 100 level and sitting near this 108. I'm still watching the oil to continue to move up and take out this high and eventually get up to this 130 area. Now, silver did not hold this 20.42 last week. You see that it has broken down right now. So right now, we basically is looking for this thing to continue to move down. But the first thing is to see, will it get a back test up here at this 2042 and see, will it get back above it, or just do a back test and fail and then start coming back down? Then we essentially are looking at these levels here to retest this low here and then come down and work itself down toward this level, somewhere around this $17 level. I wouldn't be surprised to see 17 on silver in the near future. And for gold, gold came down and tested this trend line, dipped below it and closed right near this trend line here. So it is sitting near this 1804 area. Gold is at a critical level right now to see will it be able to hold this level. somewhere around this 1804 area and then pushes back up. Or if it breaks down, then we're basically looking for gold to come down to this level near 1716 and 1677 level at this zone here, this price zone. So gold is something, one to watch here at this 1804, 1800 level, basically to see would it be able to hold above the 1800 level. So in summary, the S&P 500 tried to make itself back up for the previous high, unable to do so. And right now, we're basically looking at the internal, and it is setting up to make the market participant to be a little bit complacent. Then the S&P 500 will probably just smash it and create a waterfall and dip down and possibly come down and check this pivot high here, the pre-pandemic pivot high. And that's basically what I'm looking at, is that it is setting up for another leg down. And this leg down might be a little bit of a quick move because we are coming up for earning report, and there are a lot of expectation of revising downward on the projection for the future quarter. That's the demand getting destroyed, and we're going to get into a recession. So be careful out there, and be sure to watch the trade watch video that I will put out on the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, QQQ, and Russell ETF, Russell 2000 ETF, IWM, and we're also going to take a look at Apple and Tesla, and also the E-mini S&P 500. So be sure to turn on that notification icon, so that way you will be notified when I post that video. And be sure to smash that thumbs up to help me promote this video. Thank you for watching, and stay safe.